I'm Mickey Folt, the Mercenary Geologist, Exploration and Mining Analyst.
You're talking in your newsletter right now, we're facing some December doldrums. Could you talk about what the December doldrums are?
Yeah, well, I prefer to call them the dog days of December. And it happens every year. It happened 10 of the last 11 years, where sometime December 15th, plus or minus 2 or 3 days on either side, the Toronto Venture Index hits, if not a yearly low, at least a seasonal low. And I attribute that mainly to tax loss selling, but also disinterest in the market for investors during this period of time. Everybody's focused on the holiday and party season here.
You wrote that the strong U.S. dollar we're encountering right now has been a real anchor on what's happening to commodity prices.
It has, and I've done correlation coefficients, and I wrote about a month ago, and it was quite astounding. The correlation between the dollar index and gold was negative 0.96, which is about as high. One would be perfect. It was even higher for platinum and silver. Oil was at the time about 0.9, negative 0.9. So that basically means as the dollar index goes up, commodity prices are going down. And if you look at, for instance, the price of gold in other currencies, it's either lost very little or it's actually gone up in some currencies since mid-July.
You indicated that there are some buying opportunities right now, especially, but how are there buying opportunities? Are we getting in? Are we trying to catch a falling knife right now? Or how does somebody get in with a resource sector that looks, how would you say, undervalued?
Well, so this is a seasonal play right now. So I've already told you that around December 15th, the Toronto Venture Exchange is going to hit a low. And then if you look at the charts I posted, there is a considerable bounce from toward the end of the year and especially into early January. So what you got to do is go in and bottom fish, and I tend to put in stink bids for companies that are undervalued, have been oversold right now, with the idea that in the short term I could trade them for a profit perhaps in mid to late January, or if there's something I want to own, I can average down in stocks I already hold, or maybe it becomes a longer term play. But the key to success in this business, as all stock markets, is you need to be a contrarian, and you want to buy stocks when they're unknown, unloved, and undervalued. And I think mid-December is always a good time of year to do that.
What are some of the attributes of a good junior right now? What are some of the good investment? Who are surviving in this market?
Well, there's a number of good companies, and in these deep bear markets, the baby gets thrown out with the bathwater. So once again, there's basically 4 key criteria. You need a tight share structure. You need management who have been in this game and had success in this game before. If someone's bankrupted 3 junior companies in the past, I would no longer call him a venture capitalist or an entrepreneur. So you need good management with positive experience. And then most importantly, you need a good project. You need the right country, the right commodity, and the right kind of deposit. And then we've added a new one. Well, it's not so new now, but we're almost 4 years in a bear market. So it's very hard to raise capital. So you want companies that have a kitty already or have the ability to raise funds without diluting themselves beyond relevancy with equity financings. And there's many other models you can use, if royalty streams, regular old royalties, private equity, gold loans. There's lots of other ways to finance companies other than equity financings.
You're taking some interest in oil at these oil prices?
Absolutely. So being a contrarian, this becomes a buying opportunity. There's all oil companies have been sold off, and there's some really good ones out there that I'm doing my due diligence on right now, and I'm not quite ready to go public with my picks, but there's lots of opportunities in the oil sector at this point.
What do low oil prices mean to miners?
Well, it's good for miners. The energy inputs, in other words, the cost of energy is is for most mines is the most important cost. So oil prices are going to lower the cost of production. It's going to take a little while before we're going to see the ramifications of this. But you know, I'm looking at an oil price I don't think is going to come back anywhere near $100 a barrel. So all in all, that's positive for the mining industry.
Anything you can talk about specifically on commodities, either copper or gold, or they're all in a lump right now?
Yeah, no, I'm always copper is the key. You can't transmit electricity anywhere in the world. You can't turn on a light without copper wire, and 25% of the world is still non-electrified. People go to bed in the dark and they get up when it gets light again, and that's especially changing in Eastern Asia. So you look at a chart since 1900, the demand for copper increases about, on average, 3 to 4% a year, and that's not going to quit, and we're not finding enough good copper deposits. So a good medium to long-term play is the copper business.
Where can they find more about Mickey Fulton?
Mercenarygeologist.com. I run a free newsletter. All you have to do is go to my website and sign up. Email sign up is free, and then we can also be reached at Mercenary Geo is the Twitter feed. Almost 40,000 Twitter followers now. And then this interview, the audio portion, as all my interviews, will be replayed in streaming audio on mercenarygeologist.fm.
Thank you very much for your time.
Thanks a lot, Michael.